Hello everyone. Amazon just dropped its earnings and the stock is taking a serious hit. Share plunged over 10% after hours on Thursday because of a massive earnings miss and a huge 200 billion capital spending plan for 2026, mostly for AI infrastructure. Investors are asking, is all this AI money turning into a big cost burden with no quick payoff? This news is weighing on pre-market futures right now and making the whole tech sell-off even worse. Let's talk about what happened, why the market is reacting this way, and what it means going forward. Welcome back to the channel. My name is Kevin, your financial analyst. It's February 6, 2026, and Amazon report is the big story today. We are going to keep this simple. First, the numbers and the news that spoke everyone. Then a quick look at what the charts and market are saying. If this kind of real-time breakdown helps you, hit like now. It really helps. Let's dive in. While looking at the chart, we found that Amazon actually dropped recently with a massive volume increase. You can actually see this volume. It's actually very explicit. It's also because the expenditure of the AI is not something that is in the liking of investors because they want revenue very fast. And the 1.9 that was achieved compared to the 1.97 expected didn't actually satisfy them because they have been spending a lot of AI. So the expenditure will double this year, and it's actually worrying investors because they don't want this kind of investment, and there's no result for years. We also see that it broke a certain level, and that level is very important. This level right here. It broke this level and also broke the 200 moving average. But overall, on the weekly, we can continue to see that the price is actually trying to hit some kind of certain major level before some kind of retracement. So we expect the price to continue to come down, hit this level before trying to continue to resume. We know that Amazon have always been doing this kind of scenario before a big rejection because when we look at the charts, based on history, we have here a big rejection, also here a big rejection, and also here a big rejection. So we expect the price to also come and dance around the 100 moving average before a big rejection. But it has to also collide with this major level here. Because remember, price action will tell us a better story because it will also tell us when to enter. Because price coming to this level, it has to hit a major level of support before trying to resume. And that's where investors might jump in. Right now, we are in the sell-off base, probably because the revenue are not actually what they expected, and also the future expenditure are not what they expected. But Amazon has a story of a big spending leading to long-term wins, like I was saying before when you look at the weekly time frame. We also have a continuation because even though we are talking about a retracement, we are talking about only 10%. 10% is actually drawing a big breath. But what is worrying people is this. Even Nasdaq also fell. Nasdaq also fell recently because while big techs are going down like this, it can drive down also the index. But even if they are driving down the index, I believe this. This is actually a healthy retracement for a better push because remember, this volume right here was actually institution decision. Same thing here. The price fell down here with big volume. And what is happening right here? A big rejection after touching 100 moving average on the daily. The same scenario happened here. And the same scenario might also happen here. We are still inside a major level. I drew this recently on my precedent video. We are still in this level. When we look at the S&P 500 and the Nasdaq, the price actually broke this level. This is because the major sectors are rotating, especially for to finance, to healthcare, and also others. So we expect the price to react to this level to continue higher. But if the worries about the expenditure, because Microsoft said it will spend, Google also said it will spend roughly 185 billion. Microsoft's same story, they say the demand surge, so they have to spend. If people continue to worry, this can drop dramatically and continue down. So you have to be careful. You have to watch for the volume. If the price break this level with volume, we can just think of maybe continuing to sell. So same thing. We know that this is actually a chart analysis, so you guys should also do your own research. This is my personal take. It's my personal take. Everyone can do the way they want. Everyone can just analyze the way they think it's favorable for them. This is my personal take. The price will navigate between these two levels. Very important. React to this level, but not going very far because the price have been consolidating. It needs a certain kind of collection of liquidity. So my best advice is to wait for the price to come to this level. After collection of the liquidity, you will see a big push, probably a formation of a double top before continuing to rise. So you have to be careful, guys. And also, the price have been moving since April 2025, and now we might think that is oversold. So Amazon is telling the same story. Let's look at Microsoft. Recently, I said that Microsoft will come back to this level before a big reaction. So the price is here on the weekly. The price is already to this level. But what is worrying is this. The candle is closed, means that the volume is very significant. That worries about the expenditure is actually very significant. We have this big volume here. Either the price continue to create some kind of consolidation and holding here before retracement, or it'll break this level with big candle close and volume to continue to target this double top right here. Same thing with Google. Recently, I saw that Google were actually going higher. The price navigating around the 20 moving average on the weekly. So I said this, if you want to buy, you should wait actually for a small retracement. And what happened? Small dip and big push. Look at this volume. Look at this volume. Small dip and big push, price touching the 15 moving average and got rejected immediately. On the weekly, the price didn't even touch the 20 moving average. The price respected this major level right here and got rejected immediately. So we expect, if you actually follow my videos, this is actually the place I ask people to jump in. So guys, this was all for today. To sum it up, the quarterly four earnings was solid on revenue and O's, but the earnings missed on 200 billion capex plan of AI infrastructure the market. So shares plunge 10% after hours and is deepening the tech sell-off. This kind of moment happen in growth stocks, and big investment can scare people short term. But payoff on long term, watch those support level closely. Those level I'm talking about. If this help make sense of the chaos, hit like and subscribe so you get the next update. Turn on the notification bell, you don't want to miss the next thing turn. Drop a comment with Amazon Drop if you are following this closely. I will reply to as many as I can and send my current tech watchlist PDF to anyone who says that. Thank you for watching. Let's see how Amazon opens today. Talk to you soon and have a nice day. The part one gonna be the fundamental, the earnings story. What went wrong actually? So Amazon reported its quarterly four result for the year 2025. The net sale increased 40% to 230 billion in the fourth quarter compared to 187 billion in the fourth quarter 2024, excluding the 2.8 billion favorable impact for year-over-year change in foreign exchange rates. The oil segment sales increased 24% year-over-year to 35 billions. The operating income increased to 25 billion in the fourth quarter compared to 21 billion fourth quarter 2024. The fourth quarter 2025 operating income include three special change, 1.1 billion for the resolution of tax disputes. But the profit side missed a bit because earnings per share were 1.99 versus 197 expected. That wasn't huge, but it was enough to disappoint. The real shock came in guidance and spending plans because Amazon reportedly said that the 200 billion going to be spent, especially on chips and other equipment, and it's worrying investors that his colossal bet on artificial intelligence may not pay off in the long run. So the Amazon CEO JC said, "We have a lot of demand on AI." So the quick question is this: do you think those 200 million is a smart long-term investing or too much too fast? Drop your take in the comments. I read them all. The market heard massive spending and worried about these things. Where is the near-term payoff? AI infrastructure costs a lot upfront and return may take time. And we also see that Amazon, Google, and also Microsoft decided to increase their spendings. The demand for AI capability has surged dramatically over recent years, pushing companies like Microsoft to expand their data centers operation aggressively, with Azure serving a backbone for numerous AI applications, especially for those developed in partnership with OpenAI. Same thing with Google. Google, on 2024, they spent something like 52 billion. 2025, 91 billion. So they expect to double at 175 to 185 billion. Is actually double directly in only 1 year. This is not a normal increase. It's roughly two-time jump in a single year, and the largest cap expenditure spend ever expected by a company. So this come right after these companies also announced this. I'm talking about Google and Microsoft. And investors are starting to question if the return will come fast enough to justify the spendings. Amazon stocks dropped 10% and after hours, and it's adding fuel to the broader tech sell-offs. We have seen this week a massive drop about also other companies like Google and also Microsoft. So the bottom line is this: solid quarter, but the 200 billion plan spoke people. The market is asking, can Amazon keep delivering strong return while pouring so much money into the future? So that was what the fundamentals were saying. Now we're going to jump to the chart. And it's because the market reaction and the fundamentals are one thing, the chart will tell us exactly where we are going.